Good morning, everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today, I'd like just to cast our minds back to what happened at the end of last week and also look at how that influenced asset markets, in particular equities, bonds, and currencies. So really, the story towards the end of last week was very much about what came from the Fed on Wednesday evening and their expectation that they would move forward with interest rates increasing probably a number of months ahead of where people had been expecting. But again, that also speaks to the strength of the recovery that we've seen. The strength of the data has caused them to reappraise when they thought they would increase interest rates. That's been pulled forward from 2024 to 2023. We also heard from some Fed members suggesting that actually it could happen in 2022, very much towards the back end of that. So really pulling in that interest rate expectation. Now, from an equity market perspective, that's had the effect of seeing those sectors, those areas of the market that are more aligned with economic growth, the recovery, such as financials, materials, and energy to an extent, weaken over the past couple of days, and indeed a trend that we've continued to see this morning. Whereas the more growth-orientated areas of the market, i.e. the technology sector, has continued actually to benefit and has outperformed over the past couple of days. And you can see that quite neatly on Friday in the US, where we had the S&P down 1.3%, in contrast the Nasdaq down 0.9%. The other market where this is very evident and how the interrelatedness of asset markets is evident is in the sovereign bond market. And if we look at the shape of the yield curve, if we cast our minds back a number of months, you would have heard us talking about a steepening of the yield curve and how that has been important for value, an indication of economic growth improving. What have we seen over the past couple of days? Over that, we've seen the short end of the curve, we've seen it move up, and then we've seen the long end of the curve come down. And you can see that in these two charts. So just looking at the 5-year, you can see there the yield moving up, whereas in contrast on the 30-year, it's been coming in. And that flattening of the yield curve has also played into that movement that we've seen in equity markets. It's understandable. The short end of the curve is pricing in the movement up in interest rates, whereas the longer end of the curve is more concerned with the economic growth environment. Increasing of interest rates could or has the potential to reduce that longer term economic growth expectation. And then this other chart that we've just got now, it lets you see how currency markets have performed, and indeed this looks at the strength of the dollar over the past couple of days. And you can see that, where you see that kick up in the chart, is the strengthening of the dollar and the expectation that interest rates are going to increase, and that attracting capital into US dollar. Now that's the initial reaction that we've seen. Whether these trends sustain, we'll have to wait and see over the coming days. Just looking to the week ahead, very much a focus in the UK and on the MPC, the Monetary Policy Committee from the Bank of England. Really no change in policy expected. The thing that market will be looking for, just given what we've been discussing, is what they say about the interest rate environment, their expectations for inflation, their expectations for the QE programme, when they may think about reducing that or altering their current stance. Please do join us again as we go through the week, and we'll bring these matters to life. Many thanks. Bye.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.